Make no mistake, we are in the early innings, I think, of a gold and gold stock bull market that will be one for the records. It won't be stair steps to heaven. It won't be straight up. This market's volatile. And people with a sense of humor might be surprised to know that in that great bull market of the 1970s, when the gold price went from $35 to $850, in the middle of that decade in 1975, the gold price fell by half. So when I say there's going to be a gold bull market, there is, and it's going to test you. And if you don't meet the test, it's going to kick your ass. If you are prepared for this bull market, you're going to make an absolutely ferocious amount of money, but you have to be prepared for it. People say to me now, is it over, Rick? And I answer that question by saying to them, here's what would make me sell my gold. Until the circumstances that would cause me to sell my gold are intact, I think the bull market's intact. And here's the circumstances. Because gold does well when people are concerned about the maintenance of their purchasing power in fiat currency denominated instruments. We would have to see a balanced federal budget. That's one. Two, we would have to have a feasible plan for paying back $30 trillion in debt. Three, we would have to deal with entitlement deficits. The net present value of our financial promises to old folks like me exceeds $100 trillion. And we'd have to have a plan to deal with the net present value of entitlement liabilities. We already know you aren't going to get yours. The question is, of course, for everybody else and how that gets paid for. And then the fourth thing, pardon me, is I would need to see real interest rates. And I need to explain that. If you believe that the deterioration in the purchasing power of the US dollar is measured by the CPI, then you believe the inflation rate in the United States is 2.5%. That doesn't relate to the inflation that I have experienced in the goods and services that I buy. When I look at the deterioration of the purchasing power of my savings, I think the U.S. inflation rate is more like 7.5. The real interest rate, as I define it, is the difference between the interest rate paid to me by the U.S. 10-year Treasury, 4.5, and the rate of deterioration of the purchasing power of my dollar, 7.5. I believe that the real interest rate is a negative 3%. And for me to sell my gold, I would have to see a positive real interest rate. If you think about the economic ramifications of a positive interest rate, if you believe my assertion that the deterioration of the purchasing power of the US dollar is 7.5% a year, that would suggest that the 10-year rate would have to be 9.5. It would suggest that the 30-year mortgage rate would have to be 10.5 or 11. Rates that we haven't seen since the decade of the 1970s. For all of those reasons, the reasons that would cause me to sell my gold seem to me to be very remote. And I'll put that into a context that isn't personal. In the decade of the 1970s, according to the Congressional Budget Office, not some fat old libertarian crank named Rick Rule, the purchasing power of the US dollar declined over 10 years by 75%. That is that $1,000 $1980 bought you $250 worth of 1970s goods and services. And I think that's precisely what happens for the next 10 years. We reduce the nominal value of the $100 trillion in off-balance sheet liabilities by reducing the real value by 75%. I don't think it's a coincidence, Andy, that in the decade of the 70s, when the US dollar lost 75% of its purchasing power, that the gold price went up 30-fold. I'm not suggesting to you that the gold price is going to go up 30-fold. It's already up 12-fold since the year 2000. What I am suggesting is that it's more likely than not that the increase in the gold price more or less reflects the deterioration in the purchasing power of the US dollar. I'm not suggesting that anybody put 100% of their net worth in gold or gold stocks. I'm just suggesting that with the mean market share of precious metals and precious metals related assets in the United States being 0.5%, there's room in most portfolios for a substantial addition to gold and gold stocks. And if the mean market share of precious metals and precious metals related securities returns to its 40-year average, the market share of precious metals and precious metals related securities in the U.S. market will go from 0.5% to 2%, a fourfold increase. Imagine the impact on price that a fourfold increase in demand would have.